Okay, let's just jump right in. If you're looking for the next big growth stock for 2026, chances are you're looking in the exact same place as everyone else. And honestly, that's a huge mistake.
Because chasing the stocks that have already gone completely vertical, well, that's usually where returns go to die. It's where all the excitement gets crowded, right? The gains get squeezed, and suddenly everyone is just chasing the same handful of names.
And this slide right here, it just perfectly illustrates the point. Look, Palantir and Nvidia are amazing companies, no doubt about it. But their biggest gains, we're talking those 1,000+% returns, that's all in the rearview mirror now. The real question for us today isn't what worked last year, but what's actually going to win in 2026. So in this explainer, we're going to build a whole new playbook. First, we'll talk about why we need to move past yesterday's winners. Then, we'll lay out a growth thesis for 2026. After that, we'll dive into 5 stocks that have some serious upside. We'll also cover 3 big, overhyped red flags you need to avoid. And finally, we'll wrap it all up with a clear, actionable takeaway for you. All right, so this brings us to the core idea. We're not looking for some hidden gem penny stock, okay? We are hunting for the next wave of great companies that just haven't had their explosive, stratosphere-breaking moment yet. So here's the bottom line. We're focusing on fundamentally strong businesses that are perfectly positioned for 2026 growth, but aren't getting all the hype. It's all about substance over story. Okay, so what does a company that fits this thesis actually look like? Let's get into the evidence and break down 5 potential winners for 2026. First up, we have Vertiv. You should think of them as the ultimate picks and shuffles play for this AI gold rush. As data centers get bigger and hotter, 2 things become absolute bottlenecks: power and cooling. And Vertiv? They're a leader in what's called immersive cooling, a technology that's essential for the next generation of AI. Now, this is where the opportunity becomes crystal clear. Right now, their annual revenue is around $9 billion, but their total addressable market, that's the TAM, the total potential pie they can grab, it's projected to be nearly 10 times that by 2030. What's even more impressive, though, is the free cash flow growth. That's the actual cash the business generates, and it's up a staggering 440% in just 2 years. That shows this business is becoming incredibly profitable as it scales. It all rolls up into a really strong stock MVP score of 80 out of 100, which is just our way of grading the fundamentals, growth, profitability, and balance sheet health. Next up, CrowdStrike, a total powerhouse in cybersecurity. As hackers get way more sophisticated using AI, endpoint protection for things like servers and your laptop becomes absolutely mission critical. CrowdStrike's Falcon platform isn't just a nice-to-have, it's a must-have. And it runs on a recurring revenue model, which, for investors, is just fantastic. And again, the numbers show a huge runway for growth. A projected TAM of up to $100 billion means their current $6 billion in revenue is barely scratching the surface. Now, you might see that high PE ratio of 144 and kind of freak out thinking it's expensive, but that's often the case for companies that have just turned the corner to profitability. As their earnings grow, they should quickly grow right into that valuation. All right, our third company is Arista Networks. If data is the new oil, then Arista builds the superhighways to move it around. They absolutely dominate the market for high-speed networking gear that connects everything inside an AI data center. You just can't have AI at scale without what Arista provides. It's that simple. And from a fundamentals perspective, this slide is, wow, a real standout. Free cash flow is up an incredible 538% in just 2 years. And their debt, 0. None. Zilch. With $10 billion in cash on hand, they have a fortress-like balance sheet. This is exactly what a clean, high-growth engine looks like. Next, another cybersecurity giant, Zscaler. So while CrowdStrike protects the endpoints, the devices, Zscaler protects the connections between them. They're basically the modern replacement for old-school firewalls, securing how we all access the cloud and the internet. In today's work-from-anywhere world, this is just as critical. And the numbers really back up this story of being a modern replacement. They're at about $3 billion in revenue, but the market they're going after is projected to be worth up to $80 billion. They've more than doubled their revenue in the last 3 years and are still growing at a very healthy 23% a year. This is the profile of sustained, strong growth with plenty of room to run. And our 5th potential winner is Datadog. As companies rely more and more on these super complex cloud applications, especially with AI, they need a way to make sure everything is running correctly. Well, Datadog provides that critical monitoring and observability. They're like the indispensable watchtower for the entire cloud.
The fundamentals here are just as impressive. A free cash flow margin of 25%? That means for every single dollar of revenue, a quarter of it gets converted into pure cash profit. That is incredibly efficient. On top of that, they have 3 times more cash than debt. It's another textbook example of a financially solid business in a massive, growing market. Okay, now for every great opportunity, there's always a story stock with some really weak fundamentals lurking nearby. So let's pivot to the warning signs by looking at 3 overhyped companies that really serve as cautionary tales. First on the list is EOS Energy. The story, it sounds great, batteries for data centers. But the numbers, oh boy, they're a mess. The company is valued at 50 times its sales. That's double Nvidia's valuation. Short interest, that's the percentage of investors betting the stock will fall, is a massive 30%. And they've diluted shareholders by 300% in 2 years. That means they've issued so many new shares that your piece of the pie has shrunk dramatically. These are major, major red flags. Next is BigBear.ai, which is often hyped up as the next Palantir. But the fundamentals tell a completely different story. Their revenue is actually declining. And just look at what the insiders are doing. They've sold off $37 million of stock, while only buying $2.5 million. When the people who know the company best are selling, that is a huge warning sign. And this weak profile is reflected in its very low stock MVP score of just 25 out of 100. And finally, TeraWulf. The story here is a pivot from Bitcoin mining to AI. It's a really appealing narrative, right? But the fundamentals are just brutal. They are burning through almost $700 million a year in cash. Again, we see that super high short interest at 29% and massive shareholder dilution of 270%. The numbers simply do not support the hype, period. So what's the big takeaway from all of this? What have we learned? Well, it all comes down to a really simple framework for how to approach investing for 2026 and beyond. And this right here is the single most important takeaway of all. Hype is a story. Fundamentals are the business. When you're investing, you're buying a piece of the business, not just the story. You have to always prioritize the fundamentals. So here's your framework for 2026. First, focus on those picks and shovels companies that provide essential infrastructure. Second, demand expanding free cash flow, not just revenue growth. That cash is king. Third, make sure there's a huge total addressable market for them to grow into. And finally, treat extremely high short interest and shareholder dilution as the giant red flags that they are. Look, this framework isn't about giving you a hot stock tip. It's about giving you a lens to find the next great opportunities for yourself. So the final question I want to leave you with is this. Now that you know what to look for, beyond all the hype, what's the next great fundamental story that you're going to uncover?